Wednesday, June 28th, 2023, Monaco 64, home of alternative economics and contrarian views. It's beginning. The witch hunt. Yes, the inflation witch hunt. And the culprits are rounding up scapegoats. Yes, they're rounding them up. And it's something I expected to happen. And why? Well, because even though history doesn't repeat itself exactly, it rhymes and human nature never changes. And that's what we're going to talk about today. We're going to reference a book that I've referenced many times. Probably the best book that I ever read in terms of knowing what would happen to the economy, to the monetary system. And I'm going to give you also my opinion of what it means, this inflation blame game or witch hunt. Before I start, yes, I like to say that yesterday I published an interview I did with Elijah Johnson from Liberty and Finance. I didn't do my usual morning video. I actually went to play golf, which is a little different. And I teed off at 20-8 and I was finished by 10 o'clock. It was really nice. So something a little different. Sometimes you gotta get out and smell the flowers, I would say, in this crazy world. And it is a crazy world. And I think it's a symptom of the decay of the currency, of, the money gone bad. And I think Rafi Fabre made a really good video about it yesterday. That all the ills of society right now, you can trace it back to the money, because the powers that be have control over it through the fiat currency system. So, the inflation witch hunt. So it was helpful, I guess, to go and play golf, because when I was driving to the golf club, I actually put on LBC radio, which I usually don't listen to. And they were talking about the fact that you were going to have, or you had yesterday, the major heads of the supermarkets in this country, in the UK, being questioned or grilled by MPs about higher food prices. And I thought, well, there you go. The people who are actually partly to blame for the inflation, they're grilling the people who are only reacting to it. So there you go. There's a story here in the Mail. Why is cost of food still surging when wholesale prices are dropping? Supermarket chiefs are berated by MPs over rising profits as Brits struggle to cope with inflation that has seen baked beans up 22%, bread 13%, and eggs 19% in 1 year. So they're looking at completely wrong people, if you know what I mean, and if you know what I'm talking about. Another headline here: Jeremy Hunt to ask UK regulators to investigate exploiting price rises. Chancellor to meet watchdogs to discuss claims that company profiteering is stoking inflation. And then we had, this is one of my favorites here. This wasn't yesterday, it was a week, and he's been saying this for a while. The governor of the Bank of England, which is another the culprits. So the main culprits, of course, you should know by now, is the government and its agent central banks and commercial banks. Only they can create inflation, not business people. So Andrew Bailey blames high wages for causing inflation. Economists criticize remarks by Bank of England governor. Yes, Mr. Bailey, asking for higher wages is a consequence of the inflation that you, Mr. Carney, and Mr. King have been creating since the '08 crisis. We've seen the British pound versus the dollar, and I'm not even talking about gold. It's even worse against gold. Versus the dollar, we went from being above 2 in 2007. So with £1, I think the high was $2.11. And until last year, the pound got down to 103. So that means that, yeah, the pound is halved in value. So that means that everything that we have to buy in dollars is gone up double. And this has been, of course, a deliberate policy of the government and the central bank through negative real rates, through the zero interest rate policy, and the massive QE. I think we got almost to £1 trillion in QE, not quite $1 trillion, maybe 800 billion pounds. It's over $1 trillion. Well, old dollars at least, in terms of British pounds. And that's what diluted the currency. So I've got my coffee here. But for example, if I had milk and I was at a restaurant and I asked for milk for some reason, which you usually don't, but if they didn't have enough milk for a mug of milk and they put half milk and then half water, I would notice the difference. And that's what the government and the Bank of England have been doing since 0809. And even if you go back to 1914, since this country went off the gold standard, they've been diluting the currency. So again, I'm going to remind you of this quote by Felix Zomery, aka the Raven of Zurich. Why is this so important? Well, because this man advised governments, emperors, central banks, even the US Treasury in the first half of the 1900s. He was very well respected, and this is what he said. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So what do I think this means? The fact that they're trying to lay the blame on the people who are actually suffering from the devaluing British pound, the devaluing currency. Well, the most obvious reason is that they want to put the blame on someone else, and they don't want people criticizing the central bank or the government because they would be in trouble. But the other reason, I think, is to do with this. IMF warns central banks of uncomfortable truth in inflation fight. So now the deputy chief of the IMF, this lady here, she used to be the chief economist, she's saying that central banks are probably going to have to run inflation higher, because if they tighten too much, they could cause crises, and we've seen that happen already. So I think that's part of it as well. They're going to keep, the policy very accommodative, and it still is. Of course, not as accommodative as it was at the end of 2021 and beginning of 2022, but some would argue that it is, that in real terms, rates are still highly negative. So the scapegoat part helps them keep this policy of inflation going. And that's why I think we're only in the beginning. The other thing that it leads me to believe will happen, especially with how crazy things are in this world, and I don't have to go over all the crazy things that are going on in terms of social, geopolitical, economic. It's crazy, right? I've been alive for many decades, almost 60 years. I'm going to be 59 in October. And of course, I grew up in Brazil and things were crazy there because we had massive inflation. But now we're getting it in the West. And it leads me to believe that the end result will be a massive crack-up boom. And we're already seeing it. Even though, for example, house prices have come off a bit in the UK, they're still massively overvalued. And they could continue to be overvalued in nominal terms. And you might say, oh, you said housing could collapse. Well, it could, but these people are going to keep inflating. And that's why I think we're only in the beginning, and things are only going to get worse. And people who hold on to savings in pounds or dollars or euros or Swiss francs, they're going to lose out big time. And also people on fixed incomes, people who hold bonds or savings accounts. It's going to be 1923 all over again, unfortunately. But this time it's going to be, yeah, it's not just going to be in Germany and Central Europe. It's going to be all around the West, and probably even in the developing world, if you want to call it that. So that's why I think they're trying to find a scapegoat, and they're trying to putting pressure, you know, to bring them to Parliament and grill them. It's going to make them think. It's going to make them think, and I think it's going to create even more problems for the supply chain, because they're going to try to squeeze their suppliers, because they're thinking, well, we need to try to keep these prices down, and we're going to have shortages. That's how I see it. So I said I was going to reference a book about what's going on, the scapegoat, the blame game, and it's happened before. And most of you probably know it already. Those of you who are new to the channel probably don't. And it's this book here, Fiat Money Inflation in France. How it came, what it brought, and how it ended, by Andrew Dixon White. And it's the story of QE in revolutionary France. Yes, they did do QE back then. It was called the issuance of assignats. And they even backed this paper currency with the land and property that they confiscated from the church and the aristocracy. So yeah, 1790s France, and they tried QE. It was supposed to be just QE one, one issue, because they knew it was a dangerous thing to do. The French had experienced the crisis, the money printing of John Law in 1720. So the memory was still there, 1720 to 1790. So they were very worried, but they found out, like we're finding out now, that after every issue or every QE, yes, the economy picks up, everything's fine, but then it slows down and it doesn't come back. So there's always the temptation to do it one more time, right? Just keep doing. And I remember Ron Paul, when he was still in Congress, and they started QE, and I think it was going to be $1 trillion. It was going to get the balance sheet of the Fed from 800 billion to 1.8 trillion. And Ron Paul asked Ben Bernanke, well, this is going to create inflation. And Bernanke said, oh no, we'll just like sell off the balance sheet. It's going to be like watching paint dry. Well, the watching paint dry part was what Janet Yellen said a few years ago. So that's what we were told by Bernanke. We'll just do $1 trillion, and then we'll sterilize that, sell off the balance sheet, and go back to 800 billion, so there will be no problem.
The base should shrink or might shrink, or is that something that you don't even want to address?
No, I think we would like to bring the balance sheet back to something consistent with where it was before the crisis, which means enough to accommodate Americans' demand for currency, plus a modest amount of reserves in the banking system. And that would suggest something under $1 trillion, I think, would be
$1 trillion?
Or less, yes.
Okay, of course, that would be very unprecedented.
And here we are now. We're almost at 9 trillion. Yes, they're trying to QT right now, which is the opposite. But they're going nowhere, and eventually they're going to have to inflate again. Just like the IMF is saying, it's inflate or die, as Richard Russell said. So let's get to the book here. And this is on page 40. And I highly recommend this book. I'm going to put a free PDF in the description for you. So this is on page 40. And it says, the third outgrowth of the vast issue of fiat money was the maximum. As far back as November 1792, the terrorist associate of Robespierre, Saint-Just, in view of the steady rise in prices of the necessaries of life, sounds familiar, had proposed a scheme by which prices should be established by law at a rate proportionate to the wages of the working classes. This plan lingered in men's minds, taking shape in various resolutions and decrees until the whole culminated on September 29, 1793, in the law of the maximum. While all this legislation was high-handed, it was not careless. Even statesmen of the greatest strength, having once been drawn into this flood, were borne on into excesses which, a little later, would have appalled them. Committees of experts, right, MPs, grilling supermarket executives, were appointed to study the whole subject of prices, and at least there were adopted the great four rules, which seem to statesmen of the time a masterly solution of the whole difficulty. So Jeremy Hunt to ask UK regulators to investigate firms exploiting price rises. So it says here in The Guardian, Chancellor to meet watchdog to discuss claims that companies' profiteering is stoking inflation. So he's doing exactly the same thing that they did in France, and it failed. I won't go through what happened here, but people were guillotined for not following the rules, for not keeping prices up to a maximum. And what did it create? It created even more misery, more shortages, and higher prices. It created probably, of course, a black market. But I recommend you read it. And it was the reign of terror. And of course, it was the National Assembly that started the issuance of assignats. They were to blame for the higher prices because the money was worthless and people could see it. And it's the same thing going on now. And we have to go back to about 25 years ago, really. And it's not about party, but it was the new Labour government that started. They gave independence to the Bank of England. Yes, the Bank of England and the government now, they've changed the history of inflation, because from 1997 to 2020, the Bank of England used to have their track record wasn't good, because CPI averaged 2.9% every year. They're supposed to keep a 2% target. They didn't. They've changed the rules now. Done a video about it last year. Did you know that the government has tinkered with the CPI, and it's a lot lower than it used to be prior to May 2022? So it started many years ago, and what we're seeing now is payback for thinking that we can borrow our way into prosperity and wealth. And they're trying to find the scapegoats, and it's going to get worse. They're going to try to keep inflating. So hold on to your precious metals. I say, I know gold and silver have been under pressure lately, but I would say that's the best time to exchange your fiat currency for real money. And it's not a trade. It's about financial survival, I would say. So with that, let's quickly look at where the markets are this morning. It's 8:20 a.m. London time. We've got spot gold at 19.11. It's down just over $2. Low has been just below 19.10. High's been 19.17. Silver is down 4 cents at 22.80. Low has been 76. High's been just below 23. Stock market, Dow is down 8 points. NASDAQ is down 41. S&P is down about 7 points. To the currencies, Sterling is down 0.1 at 127.30. The euro is down 0.1 as well at 109.50. We've got the dollar unchanged versus the yen, 144.03. We got the dollar up a third versus the yuan at 724. To the other currencies, we've got the Aussie dollar. That's down 0.2% at 66.40. The dollar's up 0.15 versus the Canadian dollar at 132.15. And the Kiwi dollar is down 1% versus the dollar at 61.01. To the general commodities, we've got WTI crude up a quarter at 68, and Brent is up a quarter as well, trading around 72.60. Platinum is down $5, trading around $9.22, and high-grade copper is up slightly at $3.80. Let's look at the bond market. Gilt yields are continuing to rise, and it doesn't bode well for anything really, and it makes me believe that the Bank of England is in trouble, and that they might find an excuse to restart QE. Who knows? But things are not good. The 2-year yield now is at 5.32, and yeah, it looks like it could go a lot higher, in my opinion. As I've said before, just look at this chart. It looks really bullish in terms of the yield, which is a bad thing. The only thing that's a saving grace right now is that the long-term yields are still under control, below 5%. If those start rising quickly, that will point to the fact that long-term, the markets are losing confidence, faith and confidence, not just in the Bank of England, but the UK Treasury in terms of inflation. And I think that might happen. There's a big probability that that will happen. So US Treasury market, we got the 2-year yield at 4.75, down 2 basis points. The 10-year is down 1 at 3.76. So with that, I'm going to wish you all a very good day. Take care. Bye.